Welcome back for our marketing roundtables. Peter Meyer, Joe Vaklovic. Peter, in our last roundtable, Joe ended by talking about China, that really is the big wild card. We saw more purchases from China this week for U.S. corn. How much left do you think China does have to buy?
Well, that's the question. And we agree with Joe 100%. And that, if China stops buying today, you're going to have a real problem in the corn market. If China continues to buy, you're going to have a much tighter balance sheet. It's anybody's guess. It could be 2 million, it could be 5 million, it could be 7 million tons. We're just really not sure. But we do think that without this sell-off that we saw in late February or early March, China would not have been in the market. China is a value buyer, and they bought the value, and they did a good job of it. But the question now is, will they come back?
Some other news this week that we were watching, Joe, is the announcement from two major grain companies saying they're going to exit Russia, one of those being Cargill. When you look at that situation, we did see wheat prices respond. How does that change things as we look at that really going into effect here this summer?
As it stands now, there doesn't appear to be an issue with exports. It sounds like Russia or Russian companies are going to restaff these Cargill facilities, these Viterra facilities, maybe some ADM facilities, maybe Dreyfus as well. So there's not, the way it stands now, it doesn't sound like there's going to be a disruption, but just the possibility that maybe there could be is a big deal for the wheat market. Russia's the top wheat exporter in the world this year. They're supposed to account for, I think, 25% of all global wheat exports. So if there's any disruption, even if it's just an imagined disruption, the trade thinks for a minute that it's possible. And maybe that's kind of where we're at right now. It's a friendly factor, but for it to be realized and for the wheat to sustain the rally that we've just seen here, you may need to see some actual disruption.
What is Russia's overall goal here, do you think, Pete?
It's their goal. It's their goal all the time, right? They let companies establish nice businesses in oil and grains and whatever, and then they just repatriate it. I don't know. They're trying to control their own destiny. Whether this works out or not, I don't know. As Joe mentioned, they're the largest wheat exporter around. What are they going to do with it all? I mean, yeah, okay, we could see some go into feed wheat, feed supplies around the world, but it's hard to say what's on the minds of the Russians at the moment.
All right, Joe, real quick before we go, we saw some impressive action again when it comes to this cattle market. I mean, a lot of questions of how high can this cattle market go? What is fueling the market right now?
I think it's the cash trade. I mean, the cash trade this week, there was cash trade as good as 170, and it could be better than that late in the week. That's something we haven't seen in a while. You're getting close to all-time highs in some of these feeder cattle contracts. You had that sell-off, like in the correction a couple weeks ago, that I think may have had something to do with the banking crisis that happened at the same time. I don't know if that's a coincidence or not, because the fundamentals of cattle appear to be pretty rock solid. So we're off to the races. New contract highs. It looks awfully, awfully good.
All right, Joe, Peter, thank you so much for joining us after these big reports this week. We appreciate the insight. We need to take a quick break, and then we'll have much more right here on U.S. Farm Report.
Prepare for planting.